Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. In this video, I'd like to talk about three main things or pieces of news from Tesla for this week. The first is that Elon Musk has said that V3 Supercharger deployments are to be sped up. We're also going to talk about this crazy shareholder vote brought on by Tesla shareholders in order to force Tesla to advertise. And finally, I wanted to look at Tesla's entry into the S&P 500. That's the major benchmark stock index that every fund manager is aiming to try to beat. Let's look at whether or not Tesla will be added to or should be added to this index, and what will happen if Tesla is in fact added. But first, please hit the bell button to subscribe and be notified of upcoming Tesla videos, and smash the like button to help support this video. You can also support us further on Patreon at patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. Elon Musk said on Thursday that Tesla is planning to speed up the deployment of superchargers. They did have to slow down a bit, in a big part because of the global health crisis, and their factories were shut down. But Elon says that they slowed down supercharger deployments to allow for V3 production to catch up, and now it can finally begin doing that. It's important that Tesla's high-speed version 3 supercharger boosts production because all of the new superchargers that are installed should be the latest and greatest, but at the same time, Tesla has to balance that with upgrading the older superchargers with the new ones. And it's totally worth it to do that still, because if the new ones can charge Teslas twice as fast, then you've boosted your throughput by double by upgrading the superchargers. And superchargers are very important for people to make buying decisions for a Tesla. Elon Musk has said in the past that supercharger stations and service centers are two of the top most important things that people consider when buying a Tesla vehicle. Especially if you're looking at driving long distances, it's important that there's coverage to completely eliminate range anxiety and enable people to drive anywhere they want. At the same time, as we're seeing some competitors still trying to launch their electric vehicles, before people make their buying decisions, they'll have to consider that no one else has a charging network even close to the size and span of Tesla's, and I think it'll greatly inhibit purchases of competitor vehicles, along with a host of other things, of course. But Tesla's supercharger network is a key part of their marketing strategy at this point in time. And that brings us to this next ridiculous proposal that Electric has highlighted, and it's going to be brought up at the shareholder meeting on July 7th. The proposal is brought on by a shareholder who wants Tesla to start advertising and to take $50 per vehicle and use that towards their advertising budget. First of all, I mean, some shareholder proposals are good and some are bad. I think this guy might actually want Tesla stock to go down. Maybe he's shorting billions of dollars and bought one share to make a ridiculous proposal like this. I mean, I made that up, but I'm just saying that anybody can make a proposal like this, and this is one of the dumbest I've ever heard. First of all, Tesla stock has tripled, quadrupled from like 6 months ago. Let's change their strategy because they've had too much success. No, Tesla has better internal data than anyone else, so if they feel like they don't need to advertise, then they don't need it. Why do they need a shareholder vote to tell them how to run the business? I've never heard of that before for advertising, especially when I think it'll do more harm than good. As I said, he wants just $50 per car to be spent on advertising, which seems like a small amount. Okay, but Tesla sold 367,000 cars last year and aims for a 50% increase this year. They can't keep up with demand, so you'd literally be throwing money away. $50 times 367,000 vehicles is $18 million down the drain. That's a lot of money now. Tesla only made a profit of $16 million last quarter, so throw all of that away and then some because of this guy's idea. Tesla's strategy is to take that money and reinvest it into the product and make the product better. That's exactly what shareholders should want. What company do you know that's even close to the size of Tesla that can get away with no paid advertising? I've even seen Facebook pay for advertising before. So if the company is doing just fine, then why would you change that? And secondly, I'm confident that the company will change their mind on their own if they need to. There's no point of wasting their time and forcing them to change their business model. Furthermore, Elon Musk has over 35 million Twitter followers. If they need demand, he can leverage his account. Not to mention that after he tweets something, every media outlet and YouTube channel needs to post something about what he said. Note the irony here. Even Electric says that they believe advertising is inevitable. However, I think Tesla has built up some very powerful marketing channels that it can leverage. Another example is their live events or making a YouTube video on their official channel. Somehow Tesla got 600,000 pre-orders for Cybertruck. How did they do that without any advertising? Just because Tesla doesn't advertise doesn't mean they don't do any marketing. I think they have one of the best, if not the best, marketing team in the world, and it all starts with Elon Musk. And so I don't think this proposal will go through at all, but let Tesla decide when it needs to advertise on its own. They have an insanely good marketing track record, and I don't think anyone understands that for every talk show or podcast or live event or tweet or anything that Elon does, it's free marketing for the company. Alright, so now let's talk about Tesla's potential entry into the S&P 500 that everybody is super excited about. First of all, S&P stands for Standard & Poor's, and the S&P 500 is a stock market index encompassing the 500 largest companies in the United States. What exactly is an index? It's just a list of stocks, but in this case, the S&P 500 is one of the most popular indices, certainly in the US, and it's the main benchmark for fund managers to try to beat the performance of this index. The S&P 500 has had some pretty impressive performance. It's up about 7 to 8% every year on average over long periods of time. If you look at almost any 20-year period, this holds fairly true as well. And that's because the top 500 companies in the US is a fairly good reflection of the US economy as a whole. So what does this mean for Tesla? Well, if Tesla satisfies a certain set of rules or conditions, it can be incorporated into this index. The minimum rules for entry are that Tesla needs to be a US company, so check. Their market cap must be over 5.3 billion. I guess that must be larger than the smallest company at the time that's in the index, so check. Now, over 50% of the shares outstanding must be publicly tradable. I believe that's true. We're going to skip to number 5. So the stock must be active and must trade for a reasonable share price. I mean, Jim Chanos may not think so, but yes, this is the case. And so the only question mark is number 4. It must have positive earnings in the most recent quarter and have been profitable over the last 4 quarters. So looking at Tesla's income statement, they had a huge loss in Q2 from last year, which is actually larger than the next 3 quarters combined. So Tesla is not profitable for the full year, and it's never been. However, for the first time, Tesla has the opportunity to be profitable for the full year because as they report the next quarter, which is Q2 of 2020, the quarter that we're in right now, this window of earnings will shift and last year's quarter will be replaced with the new upcoming quarter. Now, if they're profitable, because the most recent quarter needs to be profitable as well, then they will fulfill the minimum requirements for being added into the S&P 500. So this sounds amazing, what a huge accomplishment. However, I don't think it's actually a good thing, and Tesla doesn't need to be added into the S&P 500. It actually offers very little benefit and may actually be a detriment to Tesla shareholders who seem to be overly excited about this happening. Basically what happens when Tesla is added into the S&P 500 is that the bottom company in the list is usually knocked out, and Tesla is placed into the index. It'll be about 36th in the list due to its $154 billion market cap. If you look down the middle column here, this shows the weighting inside the index. So Tesla would be in between AbbVie and McDonald's and would therefore have a weighting of about 0.6% of the S&P 500. So any mutual funds or ETFs or anything really that tracks the S&P 500 will need to increase their Tesla stake in order to be 0.6% of their portfolio. And that's huge when you consider literally trillions of dollars in holdings linked to this most popular fund. So a small portion of that needs to go into Tesla stock. So investors are happy when these funds are forced to buy and you get a small pop in Tesla stock due to the artificial demand. However, this pop in the stock is usually short-lived. So if you're looking for a short-term gain for absolutely no fundamental reason at all related to the company, then that's great, you'll get that. However, the stock will fall right back down again as people sell it on the jump. So this isn't beneficial to long-term shareholders. One benefit might be that these fund managers who buy the stock tend to be buy and hold managers, so that will effectively reduce the supply of Tesla stock. So maybe that's possible, but after Tesla gets added into the S&P 500, the stock will move very much in tandem with the index. Do you ever notice how some days just everything is up in the entire index? And some days everything is down altogether. A big part of the market has become beholden to or tied to index funds and ETFs. People keep saying that there's a bubble in index funds. I disagree with that, but they continue to grow and control the movement of many individual stocks. For example, if a company like Tesla reports some great numbers, but the overall market is down, it tends to drag down everything with it. We actually tend to see that a little bit now because Tesla is a component of many ETFs. So basically the movements of individual stocks could be tempered back since they are tied to an index. Finally, let's have a look at a metric called beta for Tesla versus Apple's beta. So let's look at them over the last 5 to 7 year period. Now, beta is a measure of how correlated an asset is to the overall market. It's usually good to have some uncorrelated assets in your portfolio to be diversified. You don't want everything to go down at once. That could be devastating for your portfolio. So if beta for a stock is equal to the number 1, it behaves similarly to the overall market. When the market is up 1%, your stock is also up 1%. If beta is 2, then you would expect it to be twice as volatile as the market. If the market is down 1%, then your stock would be down 2%, let's say. Now if beta is 0, then over time your stock has a mind of its own. It's completely uncorrelated to the overall market. It just does whatever it wants regardless of whatever the market does. And now if beta is -1, then it's going to move in the opposite direction of the market. Now the nice thing about being uncorrelated or negatively correlated to the market is that if the market is down big and your stock is up, you could move money out of that stock into other stocks. Or vice versa, if the market is up but your stock is down, you could move money into that stock. Again, that's better than everything being up or down at the same time, and that makes your portfolio a little bit more diversified. So we can see here that Apple's beta tends to stay a bit above 1, so moves slightly more than the market usually, but it's quite correlated in terms of the direction of the market. And to be fair, Apple is one of the largest components of the market, and therefore it may move the market itself. Tesla's beta, on the other hand, has gone down to 0.3 a couple times, meaning it's uncorrelated and could present certain opportunities or better portfolio diversification. I think by adding it to the S&P 500, which will likely happen if not this quarter, then shortly after. But that will remove some of Tesla stock's free will, so to speak, and cause it to move more in tandem with the broader market. Anyways, let me know in the comments if you agree with me or if I changed your mind, and if you still think it's beneficial for Tesla to enter the S&P 500. Alright guys, I hope you enjoyed this video. Please hit the bell button to subscribe and be notified of upcoming Tesla videos, and smash the like button to help support this video. We'd super appreciate that. You can also support us further on Patreon at patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. Thanks so much for watching.